अस्सलाम वालेकुम
अस्सलाम वालेकुम।
जी। मैंने आपको होस्ट बना दिया। अभी आप जो है ना अपनी स्क्रीन शेयर कर सकते हैं।
जी ओके भाई। Assalamu alaikum to everybody. Today we are going to start a session on financial statements. Right now I've shared my screen with you people. So everybody is ready? Should we start?
2 मिनट वेट कर लें, फिर इंशाल्लाह ताला शुरू करते हैं। बस 1 मिनट तक कोई और ज्वाइन करना चाह रहा है तो कर ले।
No problem. अभी जो हमारे साथ ऑडियंस है ये all are the entrepreneurs.
सॉरी, आपने क्या कहा?
अभी जो हमारे पास ऑडियंस है ये all are entrepreneurs.
यस।
Okay. They have started their businesses and they are so Ali, tell me when you want to proceed me.
ओके ओके।
Okay.
चलो स्टार्ट करूं। अस्सलाम वालेकुम गाइस। आज हमारे साथ मिस्टर मोहम्मद फ़र्क शहजाद, फाइनेंशियल एडवाइजर of he's serving with as a financial advisor with various organizations, and he's currently serving as a head of internal department Al Barka Business Oman. He's delivering session on financial statements. As you know, the financial statements are very important for your startup at early stage. So I hope you will focus on the session and get maximum output from Mr. Fark. Now, Mr. Fark, I hand over you. Please introduce yourself and start the session.
Thank you, Ali. Assalamu alaikum, everybody. As Ali told, I am a profession in accounting and finance and auditing as well. So I started my education. I am CAE, ACCA, BIFA candidate, and I have various experience on the finance matters. This is a profile. I work with banks and multinational companies, and internal audit. And right now I am doing my job as a internal control department head in Al Baraka business in Oman. So guys, we have a session regarding financial statements. As you all are the entrepreneurs and you're going to start your businesses, so you need to get the importance of that financial statement, what the financial statement is and why, and how to extract the statements and why are they are important. So let's start. So first of all, what is financial statement? Basically, this is a statement. These are a representation form where you pure statement, pure review what your business have, how much assets you have, what is your net worth, what is your liabilities, what you have to pay, your business going in profit or loss, how to make the decisions regarding your future concerns. So it is a very important part. As a businessman, you need to control these things. You need to maintain the things. We cannot just remember that we have made this kind of expenses and we earn from there. You need to write down all the things. And there is a standard format from the International Accounting Board. These are called financial statements. There are multiple kind of statements here, but the most important statements right now for you are balance sheet, income statement, and statement of cash flows. So income statement is also called as the financial position, financial performance of the company. the companies are now, what is the of your current, and balance sheet shows your net worth, what the business have, how many assets the business owns, and how many liabilities the business have to pay. So there are main two components of the financial statements. First are assets and seconds are liabilities. So now move on to the users of financial statements. So what are the users of financial statement? So as you are the business owners, so you are the most concerned persons with the financial statements, because you want to know how to maintain your business, how to take decisions about the future of your business. So if you will maintain the financial statements accordingly, you will see the true and fair view of your business. So for example, if you have loan on 1,000 rupees and you have the assets of 5,000 rupees and you have some other things, so you need to balance the things. You need to check, I am running off the finance. So in this condition, if you have loan of 5,000 and you have asset 1,000, so it means you are running finance, you have out of finance of 4,000 rupees. So how to balance the remaining 4,000? It will depend on your financial statement results. You will take the decisions accordingly after seeing the financial statements. And the second important user of your statement is stakeholders. Stakeholders are persons who are taking decisions according to your financial statements. Your employees are also getting in touch with your financial statements because they want promotions, they want bonuses, they want to know that how much they will survive with you. If you are low in your financial statements, you are getting loss, your financial statement is negative, you are continuously in loss position, so employee will not work accordingly. They will think that they should change the job, they will not do their work by hard. So other person, lenders. Statement, जो financial statements are the main key for the lenders. If you start a business, you need something from your business partners, I mean the other vendors. So how they will check that if you want the thing on loan, then how they will make sure that you will get the money from your statements, from your financial statements. They see that you are generating the profits, you are in good condition. If they will give you the things, the raw material, the finished goods on loan, you will pay them back. So it is very important thing. Financial statements, basically I am telling you the importance of financial statements, why financial statements are important. Same as government. Government needs some taxes on your income. So government is also the user of your financial statement. When you will make a financial statement, you will put on to the authorities, to tax authorities, to other authorities. They will see a dude earning profit. Are you giving the exact amount of tax with your financial statements is reflecting? Same with suppliers, same as lenders. If you need something, they will check your capacity, how much you can pay and how early you can pay them. If you are weak in your financial statements, your business is not showing profit, in loss, the supplier will be hesitant to provide you things. Customers are very concerned about, if you are getting the regular customers. For example, you are connected with the furniture industry and you need raw material, nails, wood from your the customers are getting tables, office chairs from your regular basis. The client don't want to change the vendor again and again, so they need a permanent vendor. When they need a thing, they will just tell you and you will deliver the things to them. They will also check your financial statement. If you are not good in your financial statement, your financial statements are not reflecting that you have a good potency, that the customer hesitate to continue with you. They will think that they will not continue their business, so they will choose another suppliers for them. So it is very important thing. And last and but not the major important part of the business is investors. Investors are the persons when you want to expand your business, you need capital. So you look for investments, further investments as a shape of partnership, maybe as a shape of some soft loans. So investors are the person who provides you the money. Nobody will provide you the money if they think that you will not continue. It is called going concern. So in a nutshell, the financial statements have a very important impact on your business. All the stakeholders, all these persons will see your financial statements. Even you are the business owner, you have a plan, you will have a plan that you can manage a finance or something from that in case of need, but they all need to review your financial statements for your relationship with you. So guys, we're moving next to the introduction of financial statement. There are three major kind of financial statements you need to prepare. First of all, I think balance sheet, then there is income statement, and here is a statement of cash flows. Now I will tell you the briefly what they are. First of all, balance sheet. Balance sheet is the amount where balance sheet is a statement which tells you exactly what the business have, where the enterprise stands at the specific date. For example, if I will ask you people, what is your net worth? You will show me your balance sheet. So balance sheet reflects your assets, your liabilities, and your capital amount, how much money you have. So it is a very important, at the end of the period, you need to prepare balance sheet, which will tell that all the stakeholders that how strong you are in your business. The thing is income statement. Income statement is made for a period of time. For example, I will say how much profit you earn in the month of December 2022. So you will tell me total revenue and your expenses. And income statement reflects the business net profit, how much profit you earn from your business from the specific period. Third, statement of cash flows. Statement of cash flows is also for the period, during the period. So I will say how much cash you generated in the month of December. You will tell me that this is our incoming cash, this is our outgoing cash, and now we have total this amount of cash in hand. So this statement of cash flows will always reflect you the exact amount of the cash your business is having right now. Only cash. Okay. Now, first thing I will going to tell you that there is the income statement. As I told you that if I will ask you how much profit you earn in the specific period, in last month, in last year, you will tell me about, you will show me your account statement, income statement. Income statement is all you people things sold, and you will minus the expenses from all your sales, you will get a net profit. There are some other calculation including in income statement. There are two type of profits income statement. There is gross profit and there is net profit. Gross profit is sales minus expenses, and then there will be gross profit. After that, you will get the net profit before after deducting the income tax and other operating expenses from them. And balance sheet, what your current business financial situation is. As I told you earlier, there will be assets, liabilities, and shareholder equity. Shareholder equity means the capital the business owner invested. So all you guys are the business owners. So what you have invested in the business at the start of the business is called your equity. And other cash flow, as I told, that how cash come and go. It is an example of a business. I am showing you the balance sheet of a business position. You show on the left side of your balance sheet, there is asset, cash, note receivable, account receivables, supplies, land, building, office equipment. These are the all assets the business owns. Remember one thing, that business and business owner are two separate things. What you have, it is not the same the business will have. Business will have the more than your personal worth. You you are acting as an owner. So owner is something different and business is something different. Maybe you have 1 million rupees, but you have invested only 5 lakhs in your business. So business worth is 5 lakh. So here in your balance sheet, only the business worth and business expenses will be written. On the right side of the balance sheet, you show there is liabilities and owner equity. liabilities, as I told, liabilities what you the business is liable to pay. There are two kind of liabilities. Businesses pay liable to pay towards other papers, and also owner of the business. So the which capital you invested, the business is liable to pay you back. Always you will check there is a capital stock in this as example 150,000. This is the capital stock which invested, and return earning is what is return earning? Return earning is a profit which you earn and you decide to invest in the not to withdraw the profit, but invest in the business again. So 150 was the capital which you start with, and return earning the profits you invested in the business. So for further explanation, as I told you, the business is a separate from the personal affairs. So here is come. What is the assets? Assets are the economic resources that owned by business. You invested 5 lakh in which I told you in a start that you invested in your example here is 300,000 in matlab example you invested 3 lakh in business, from which $22,500 are the cash, 10,000 are the receivables, and 60,000 are the receivable account receivables. Account receivables are things which your business need to receive from somewhere. You give some services or use either travel agency, example here Vagabond travel agency. So you have paid some visas or tickets to their clients and they still have to pay. So these are account receivables. Business will recover this amount. Supplies, you give some things to customers are here. Land, you purchase a land for your business. Building, you purchase a building, office equipment for table, computers like this. So all are your assets which you purchase from your initial investment of 3 lakh. So when you are recording your assets, there are some principles how to record your asset in book. First of the thing is cost principle. Cost principle means you record the asset in your books at which price you purchased. Maybe there is a price of a asset in market. For example, you purchase a laptop for 10,000, but market there was a price of there the price was 15,000. But your relation, your reference something using discount policies, you purchased it for 10,000. So you will record the asset on cost. Second thing, going concern assumption. What is going concern? Going concern means how long the business will go. When you will prepare your balance sheet, your financial statements, you will assume always a business will pursue, business will go long. For example, on 31st December, you made your statements with the assumption that 2023, the business will carry on. It is called going assumption. The thing is objectivity principle. In this, the business should be, accounting information must be unbiased. Unbiased, you're not going to favor your business. For example, if you purchase a laptop for 10,000 and you write the exact cost 10,000, but if you think that what if I will write 15,000 because the market values are 15,000, it is unbiased. It is biased. You are getting biased with your business, that you will write 5,000 extra and your capital will be increased, your asset will be increased by 5,000. Actually, you purchase it for 10,000. So this is objectivity, that you should not be biased. You should be unbiased, record as you expense out. And here is other thing, stable dollar. Stable dollar. Stable dollar is a global term. It means that the currency value will be the remain same. Always the thing you will writing there should be in current monetary value. There should be a monetary value of that. Your laptop you purchased for, maybe you get the laptop from your friend on a free. He said, yeah, did you have a laptop? Right, take it. He gifted it to you. But As per financial accounting principles, the asset recording principles, you must write the amount there. So you will take the market value, what the market value of that asset was at the time of when you received that. Because in the financial statements, you need a value. So always you will give a value to your things. Right now, dollar is the most acceptable currency in our international trade in international market. So I am putting example for dollar here. Now, other side of the balance sheet is liability side. Liabilities are what? Liability is basically liable. Liable means what you want, what you need to pay. The business is under loan. There are some kind of loans, some kind of future negative cash flows. Means you purchase the 10,000 rupees, but you have only 7,000. The other 3,000 to pay back from purchase the thing. These are called, it is your liabilities. For these, you most of things you make a notes payable. You write to them that you will pay this amount in future. In your example, there is 41,000 note payables. You get some things and you need to, your business need to pay that amount back, and you write there that we will pay $41,000 in future. It's a notes payable. It's another negotiation instrument. It is used in accounting. Second thing, accounts payable. Same as in this, you purchase something, you pay 50% of the balance and 50% still you need to pay. It is accounts payable. There are some salaries, there may be some salaries you don't pay your staff previously, or you need to, you are following the method, yet you pay after 1 month salaries. It is your business approach. So it is your salaries payable. It is your liability. You must need, your business must need to pay. When I say you, it means your business. Business must pay the salaries. And other section of the liability section is honor equity. Capital stock. Capital stock is the value which you invested in the start of the business. 150,000. And return earning 70,000. As I told you, return earning, what is the returning? Return earning the amount which business decides that in previous year business earned 70,000 profit, and as an owner you said, okay, I will not withdraw that profit amount, I will roll that, I will invest that my profit in the business. So which profit you incorporate in the business is called return earning. So see, there was total net worth of 300,000. Assets are equal to liabilities plus honor equity. It is accounting equation. It is called accounting equation. Asset is equals liabilities per honor equity. It should be always equal. In your example, see, assets are 300,000 and liabilities are notes payable, accounts payable, and salary payables are 80,000, and capital stock and return earning is 70,000. So total will be 300,000. It must be equal with asset. So assets and liabilities are equal. Now, step by step, what is income statement? As a business, you sale of goods. For example, in our business, we are giving an example here, Vagabond Travel Agency. You work with travel tickets, visas, some tourist packages. So for what? This is your product. You are selling a ticket or a outing package, a tourism package. So you sold one package for $100, for example. So you sold it, and there must be a cost. Every business have a cost. So what is the cost of sold of that package? You need to promote, you need to give salary to someone. For this, you need an office. You will sit an office, there will be rent, there will be some other expenses. So this is a cost of goods sold. Before this, you will not be able to tell, because you need an office to sit there. So the cost is there, and you are minusing that cost from your sales revenue. Sales minus cost of goods sales will bring your gross profit. This is the first profit. It is profit without operational expenses. Operational expenses mean the operational expenses are the expenses. These operational expenses are the expenses which you are bearing to pay them, to sell your product, to running the operations of the business, to your assets are being depreciated. So these all are the operating expenses. And so you take some loan from bank or some other institute, so you will have to pay interest. There will become interest earning before tax. Then you pay taxes to government according to your earnings. And after minus the income tax, you will get the net income. Here is the example. See, this business is selling 227,000 and cost of good is 2025. So after minusing, we will get the $675 gross profit. Now there are some selling expenses, some administration expenses, office expenses, stationery, rent, traveling fares, for your staff food. When the customer coming, you are serving tea or something like that. All the things will be minus, and there you have some assets which will be depreciated on annual basis. So after minusing all the things, you will get the depreciation. And when you will get all the operating expenses minus from 675, the 292, there will be net profit before interest and taxes 382.5. And as I told you, you will take some loan and you will have to pay interest. So you had an example, $67.50 are as an interest. After deducting that interest cost, the earning will be 315 before taxes. Now government wants some taxes. Government tell, okay, government say, if you earn this money, then you will have to pay taxes according to this income slab. Here in this example, you are paying income taxes of $110. After minusing that net income taxes, then there will be net income after taxes and interest. This is 204.75. As it is mentioned, this is also considered that these things will be reflecting in cash flows. This is the cash generated from your activities. This means what your business function is. The any revenue which your income which you are getting, which your cash you are generating for your main business course, it will be as operating activities. Second, cost of debt financing. This you are paying for your debt. The loan you get, you are paying for that. Third thing is income taxes which you have paid, and then will be net income. This is other part we will decide. I will explain it to you in further. Now, cash flow. Cash flow. What is the cash flow statement? Cash flow statement is, it tells the total step by step from where the cash is coming, where the cash is going, from which source cash is coming, which source cash is going. So there is three major source of the cash flows. First, from your business, directly from attributed with your business. For example, you are selling tickets and how much cash you are generating from them. You have sold tickets of 1 million, so there is a cash. Other thing, the other source is from investing source. You have invested somewhere other business, your business invested somewhere other. You have take some shares of stock market, you're getting some profit, you have some bonds, you are getting interest income from there. So these are the other incomes which you are getting. So third is financing activity, from where you will get, this is the represent final use of the debt equity as issue of, when you previously I left one thing that I told you, I will explain it later on. This is the that you need some more finance, and you decide that you need to add some investment in your business through stock market. You issue some shares in stock market, people will purchase your share and they will become the partners of your business as well. So the things you get from that source after issuing the shares, it is from financing activities. So what the cash flow statements actually tells, it tells how much cash you generate in a specific period. You will compare your beginning period at the end of the month, the closing period. The gap will be the actual cash you generated during the year, during the specific period. This is the example of cash flow. See, here is net income. Okay, ending cash balance at 2009. At the end of the 31st December 2009, there was the balance, and the same business balance will be at 2010. So here is the ending balance $94.50, and now in current month you earn gross net profit of 204.75. In the example, you increase your account receivable, means you have assets in, you have some money to get back from your where you provide your services, 22.50, but you need to collect that. You have not collected that, so it is not a cash. You will minus it, so it is minus 2250. And increase in inventories, you people purchase some things for your business inventory, 148.50, means you have used your cash. So here you will deduct the cash. And after depreciation amount, I told you that every business have assets, and asset will be depreciation according to some rates. You will add the depreciation amount because this is not a cash. This is a non-physical expense which you put. It did not reflect it your cash balance. It is settled in the books only. No cash reduced or no cash reduced because the depreciation. So we will add that back. And accounts payable also you need to pay. You still not paid, but minus from your asset, your balance sheet liability side. So still you have $4.50 in your head. You need to pay. You did not paid. So we will get the total after minusing to 22,148 from 204 and adding back the amount. It is the actually cash you generate during this period, 173.25. So then you purchase a plant and equipment. For example, you purchase computers, you purchase printers. 175.50 means you invested the cash. The cash is outflown from your company. So 175 is negative balance. You will deduct 175 and a negative. Other financing, you increase some notes to get money. 9.0 you invested. So money
Excuse me?
gone. Yes, yes.
ये लिंक जो है ना एक्सपायर होने वाला है, 40 मिनट का लिंक था, तो ये भी 40 मिनट मीटिंग को स्टार्ट हो गए हैं, तो ये लिंक एक्सपायर हो जाएगा 1 मिनट बाद। तो मैं सबसे यही कि ये जो लिंक पहले प्रोवाइड किया हुआ है, इसी लिंक को दोबारा आपने ज्वाइन करना है। जैसे ये मीटिंग एंड हो जाती है तो जो रिमेनिंग हमारा टाइम होगा वो हम दूसरे इसी लिंक को दोबारा ज्वाइन करेंगे।
Okay, thank you. So the investing activities, financing activities, I told you what is financing. When business needs money more, you will think that, okay, we will issue some shares, some notes.
I suggest कि आप उसी को अभी इसको एंड कर देते हैं और दोबारा से कर लेते हैं, क्योंकि 1 मिनट तो रह गया, तो दोबारा से कंटिन्यू कर लेते हैं।
Sure. Proceed with that.